What's going on, guys? This is Matt Fractal back with another video. Today we're going over something quick on the GBP USD. I wanted to show you guys how, if you guys watched my last video about backtesting, how would you guys move forward with it? As you know, we get straight into the videos. So as I said, today we're going over price action on the GBP USD from Friday the 13th, 2025, June 2025. So as you can see, start off the day, I would like to mark out my opening price at 12 a.m. Eastern Time with a vertical line just to delineate time. And then I will add a horizontal line on the opening price at 12 midnight Eastern Time. The reason why is because on a general rule of thumb, when price is trading below the opening price and you're bullish, you're probably going to get a setup below the opening price. Vice versa, if you're bearish and you mark out your opening price, you're most likely to have a bearish setup above the opening price, right? Just simple power of three concepts. Yeah. So what I'm specifically going to show you guys today is the New York session, which if you guys go back to the video, that starts from the 7 a.m. to the 10 a.m. Eastern time window. That's the New York session, the New York kill zone, or just the best time to be trading for the New York session. As you can see, we had these old lows, 1 and 2. This old low got ran in London here, and as you can see, we ran it below the opening price and we had a rally, but the rally didn't stay for long. We went back above the opening price and then we traded back below the opening price going into the lunch session and then the New York session. So 7 a.m. we open here on this candle, right? So I'm going to mark out my opening for 7 a.m. right there. We open at 7 a.m. Eastern time. We traded lower. So we had a move lower for the protractionary stage, which is basically a manipulation move to show traders the wrong way before going the opposite way. So this candle at one point was a full bearish candle, taking out these old lows. But what did I tell you? When we take out old swing lows and old swing highs, of course we can continue going lower or higher. But potentially, you need to look out for reversals, especially in the time of a kill zone or a session timing. Let me explain. So we open here at 7 a.m. We traded lower manipulation below these old lows. So let's mark out this liquidity here. And this is the hourly chart, guys. This is your intraday higher time frame. If you're only trading intraday, looking for intraday moves, of course, go up to the weekly, the monthly, the daily to get your higher time frame. But on a general rule of thumb, going day to day, once you have your higher time frame set, you can come into an H1 chart and just look for liquidity. What is liquidity? On its simplest terms, old lows and old highs. So we run out this old low at what time? 9 a.m. 9 a.m. is basically the heart of the New York session. So when I'm seeing this run on stops on an hourly chart at 9 a.m., this right here is your big signal that something potentially can happen. Why? Because we ran into liquidity. If we ran into liquidity at 9 a.m. and I told you guys to always look for potential reversals, and I'm looking for the same thing, I'm going to go down into a lower time frame, which I like the 15-minute chart, and I'm going to look for range building, fractal range building. What is fractal range building? Well, we ran into an old low on the hourly, then we came down into a 15-minute chart. If this is a potential low in the market because we ran out the sell stops, if I look back up into this range here, the range that came down to take out the old low, where are the old highs, the opposite end of the range? Well, from this high to this low, we ran out the liquidity. So if we're going to reverse, I'm obviously expecting price to either run back up into this old high. Not saying it's going to fully clear it, but that's what I'm looking for price to do because it's 9 a.m. New York session. We ran liquidity. Now I'm looking for price to change direction and go the other way. Also, we're below the New York opening price, and we're also below the New York kill zone opening price, the 7 a.m. open. So this is a high probability potential bullish market, which with hindsight you can see what happened. So we ran the O low. Now, when we draw out our opposite end of the range right here, we're going to classify this as, I'm going to give you guys a couple seconds before I write it out to answer the question. What would this old high be? What would we consider it? If you said sell side liquidity, unfortunately, you're wrong. But if you said buy side, you are correct. This is buy side liquidity. Let's put that at the top. Let's make it red. All right? So you got that buy side liquidity. Now, when it comes to entry, what did I tell you guys with entry? When we run that O low, we're either going to get a strong move up, a retracement back down to the O low to create the pattern, the optimal trade entry, or just the fractal Fibonacci retracement. So let's go down to a 1 minute chart. Because now we have a range. What's the range? The range is from this low, because we ran out this one. So there's stops here. We took the stops, right? And now the opposite end of the range is up here, the buy side liquidity. Of course, we have all of these buy side liquidity pools up here as well, but this was the closest one. This was the nearest one to the run. So now we have this range, and now look, we create a model. If we're looking for price to come up here, we just look for the pattern now. So let's get deeper into price action. All right. So what do we have? We have the run, a strong move up here, right? And then we have the retracement, right? If you guys can't see it that clearly, I'll draw it out for you. So we have this O low right here. Boom. We had this O low. Did this make a strong move from this low to this high? Was this a strong move? No, this pretty looks like consolidation. From this low above the liquidity back here, this move is just strong move. Multiple green candles, right? And we broke the structure. This old high here had got broken here. So that's a break in market structure. And why is this a break in market structure and not a retracement or reversal potential? Because the higher time frame hourly chart intraday is bullish. So on my 1 minute chart, I'm not looking for anything bearish. I'm looking for bullish retracements, which I do get here. So from this O low to this high, right? If I go closer, we had the low, traded up to the high. They're going to ask me why I'm not using this one, this high. You can use this one, right? But where did this low go? This low, what's the low on this candle? The low on this candle is 1.35219. What's the low on this candle? 1.35220. So this candle went lower than this one. So I'm going to use this as my high. From this low to this high, retracement. Let's put that back up. We trade into the 62% to 79% retracement. This is the most optimal place when you're bullish and you're doing fractal OTE patterns. This is the best range for you to get in from the 62 to the 79%. Also, when you're doing Fibonacci, you want to look back into the range from this low to this high and see if you can match the range of the 62 to 79% retracement to a actual PD array in price, where price is actually going to refer to. So let's just take this off. In this range from this low to this high, if you go back down into the swing low, you see an order block here. These two candles are actually 1 and 2. These two down close candles are one consistent order block, right? If I draw out the open of this one, right? Just make this bold. You can see price traded aggressively above the sell side liquidity, retraced on a 1 minute chart down into this order block. You go long there. Where would your stop go? Easy. Your stop will go below the range low here. So you have an entry here at 9:30 a.m. You have a stop below this swing low. And now, where am I getting out at? Most traders don't know where to get out at, but I just showed you guys where we should get out at. We created our range on the 15-minute chart. Once we do that, we know that we have our low end and our high end. This is our low end because we ran the sell side liquidity. You look for the optimal trade entry, the fractal model, from low to high retracement. You buy it, stop loss below the OLO. And then where do you reap your reward? You reap your reward above the buy side liquidity, the opposite end of the range. Boom. Enter here. Take profit above the buy side. You can take everything off and just be done for your day around 10, because this would be like the London close session. But if you just take a piece of it here and wait for the daily range to expand, then you get very nice risk to reward setups, and you're understanding the market in its most simplest form. Liquidity. You take sell side liquidity, we reverse, we take the buy side liquidity on a lower time frame. But eventually, we take the full buy side liquidity pool, right? And to end the day around the end of the London close, 12. Then what does price do after the London close? We trade back down into the middle of the range from this low to this high, and we consolidate to end the day. So hopefully that was insightful. It was a quick video because this was Friday. This wasn't taken live. This wasn't traded. This is just my backtesting strategy that I showed you guys in my last video. Make sure you guys check it out and make sure you guys subscribe as well. But this is just something that I'm showing any new trader that could come in with no knowledge, start finding these hourly swing lows and swing highs during the timing, and then looking for the pattern to go the other way. So, as I said, hopefully you guys found this insightful. My private Telegram link would be in the description below. And if you guys learned anything, give me a thumbs up and give me some comments on what videos you guys want for the upcoming weeks. Fractal out.